interesting story. Take a look at NVIDIA. This is such a
Good afternoon, ladies and gentlemen. It's a little past noon. This is the real-time video recording of the dynamics of algo HFT trading that I use all the time. So the SPX puts are right now up more, slightly above 100% on the hedges, and you can see here the dynamic. I even put a shaded box in my previous chart posting to show where the what the ranges would be. At this point, the market's fighting. This is a 1 hour chart. You're going to see here that it's the 1 hour reset. Nothing to get truly alarmed about. And this reset needs to basically get down here. Things get overbought. People get excited. Don't take their profits. Well, that's and the punishment is the algos take your profits away. That's why profit management is key, as I've constantly alerted. And more importantly, you can see here from a technical aspect, you have the 50, you have the 34, and right now it's retesting that. A quick fall below would bring us down into this uptrend line retest at 23.35. That's another 5 points on the SPX, and you can see that's a possibility. This is obviously a bearish engulfing, which I also mentioned. You have to look at all probabilities when you're an active trader or any type of trader for that matter. It's not a one-way ticket to happiness. It's not a one-way ticket to the blues either. We had phenomenal profits today, and smart traders took in a lot, and the swing traders are basically sitting on the ones that they like, that were alerted, and of course this could suddenly swing around, create another green candle. That's just the nature of the beast. Look at this from yesterday. This was 12 noon, and look what happened, right? So it's constantly playing on. I try to teach people as much as I can. Many of you have picked it up reasonably fast. Many of you are stubborn and just don't want to learn. Many of you have signed up for advanced coaching sessions and learning rather rapidly. And I'll be hosting those on the weekend again this weekend. Last weekend was Easter weekend. So obviously, we didn't have much time to do all that. So the bottom line is, the more you focus, the more you learn. The mystery of the markets are revealed, and you can manage your trades better. It's a game of probabilities, not a game of certainties. Good luck. I'm going to leave this on. This is a 25-minute clip, and I highly, highly suggest you use this on your own screen. Use it as a big online trading tutorial for your own benefit. Thank you for listening. I'll be back shortly. Back again for a quick tutorial. So what you're seeing here behind you is the movements. Excuse me, as I explained earlier, and I'm drawing some annotated drawings here to guide new or beginning traders in understanding the dynamics of intraday back and forth on the markets. All right, this is how you learn. You gotta have a passion for it, and then the mystery is somewhat revealed. And of course, we can get sudden flash crashes, which we have seen quite a few times. But that doesn't mean it's the end of the world. A clear example is recently as yesterday. Everything bought yesterday on the selected trades delivered some monster gains this morning. So let's get back to real time. And this is what you're seeing. This is the 15-minute version, so there's more noise. Remember, when you zoom into something on a smaller time frame, just like anything else in life, you see more of the noise or the particles moving. And that's just the laws of natural physics, right? So if we zoom out and look at the 1 hour, which is for less noisy traders, you can see here that this red circle here is where the resets are happening. It needs to reset, and I believe the reset could possibly slip us down very quickly towards the 23.35 level. So having a little bit of those hedges, which were bought around $1.40, they went as low as 97 cents, repeatedly went as high as $2.45, sold a bunch there, and then now they're at $2. They're at 2 right now. These are the April 17 expiring today, 23.45 puts. These are for active traders who want to make money during the day to complement what they're doing on the swing trades or on the overnight trades. That's just the way pro traders work. So I'm going to leave this on again. We have approximately 9 minutes left on this video cast. Possibly one of the best online real-time tutorials that you can study on your own and understand. Of course, sign up for the advanced coaching session. The 5-session pack is the best. Allows you to understand many different aspects, dynamics of the market, not just physical, technical trading, correlations between different asset classes, a bit of macroeconomics, chart structure, chart analysis, and I think it's the best deal for your money given the fact that I haven't even bothered raising any rates that much over the past 3 years that my service has been in action. April 15, 2014 was the day, tax day, that I launched my service, and today is obviously 3 years and 4 days. So that's it for now. I'll come back a bit in the latter part of this online real-time screenshot of the S&P 500 E-minis, known the ES, and all this for the benefit of all of you guys. All right, focus.
because, of course, if Lulu does make it, as I know Steve and I bought it when the stock fell through 50 and not too long ago, and I sold puts at that time similar to IBM. Now I'm still on this one. With the chatter on private equity now, I'll probably hold on to this one at least till the May options I hold expire or pretty close to that.
Right, and just quick, Steve, you hoping for a private equity deal on Lulu?
Yeah, but I think I just win exactly the soft quarter according to this last one. The fundamentals continue to improve. It's a great product. It's got that brand recognition. It can't be disintermediated by the internet.
All right, and Lulu shares are moving slightly higher right now. We want to get to Steve Leishman here with some breaking news from the Fed. Steve.
Thanks very much, Melissa. Boston Fed President Eric Rosengren saying that the balance sheet reduction should begin, quote, relatively soon, and that rate hikes should continue while the balance sheet is reduced. Rosengren speaking at a conference in New York. He supports a gradual, though earlier balance sheet reduction. As you know, the Fed is now sort of openly debating the strategy for reducing its $4.4 trillion balance sheet. That said, he thinks interest rates should be the main monetary policy tool, but the balance sheet in the future, he says, will continue to be a tool. And the reason is because he says outright, zero interest rates will be more common during recessions. And that means asset purchases and increasing the size of the balance sheet and decreasing the size of the balance sheet are also going to be more common. But this is only for sort of your short-term traders and your long-term traders. Short-term, we're going to get an earlier balance sheet reduction, according to Eric Rosengren. Long-term, this idea of buying assets, selling assets, is something that's more in the future, along with zero interest rates, according to Eric Rosengren.
Okay, and Steve, just a quick question. Am I reading this right in that he's saying that we're going to have an earlier balance sheet shrinkage, and at the same time we will have rate hikes? And so the notion that in the period where the balance sheet is wound down, that rate hikes could be on hold for some time, that may be off the table?
So you're like the periscope on the top of a sharpshooter's gun right there, Melissa, zeroing in on the issue right there, which is that many people had suggested that perhaps when the Fed reduced the balance sheet, they would stop hiking rates. Eric Rosengren is stepping forward and saying, no, not in his opinion. He thinks these interest rates should continue while the Fed does a very gradual decline of the balance sheet. This was an idea that was put forward by Goldman Sachs, the idea of a halt to interest rate rises. Eric Rosengren, by the way, just one vote, and yesterday we had Esther George giving her ideas about how the balance sheet should be reduced. The Fed right now is in the process of talking about how to reduce this balance sheet. No decisions have been made. They've been talking about reducing the reinvestment gradually, doing it all at once, tapering it, for example. They haven't made these decisions yet. This is why we're following each statement by all the members very carefully to see where the balance is, where's the consensus forming on the Fed for reducing that balance sheet.
Well, you do these two things simultaneously, and that effectively is tightening on top of tightening.
That is what it would be, and the market would perceive it as that. Remember now, Stan Fisher earlier this week also talking about the balance sheet said, you know what? There's not going to be a taper chance here because we've already announced all this, and the market has so far really barely reacted. So he thinks that's not going to happen. But whether or not the market's prepared for this double idea of reducing the balance sheet and lower interest rates is unclear at this moment.
Not sure either. Steve, thank you. Steve Leishman with some breaking news here. What do you think happens?
I think if they do that, I think the market's saying go ahead and do it. They've been talking about it for a while. The balance sheet is going to be drawn down. There's no question about that.
But are we thinking about tightening from a hike and tightening from the balance sheet?
You can do it. I think they've got a free pass through. No, I think they've got a free pass through without upsetting the market too much. You're not saying you think they do it at the same meeting. No, I don't think they do that. I think that's too provocative for them. But I think that the market could tolerate. And here's the real issue. The real issue is that we're now in a very extended economic recovery, in a very extended, from a time standpoint, market. If we go into recession, there are no levers for the Fed to pull. And that's got to be in the back of their mind. And there was a paper that was put out last year's Jackson Hole by the Fed that said exactly that. We've got nowhere to go. Usually we've got a 5% spread in rates. We don't have that. That's the biggest issue. Here's another issue, and the Fed would never say this, we know this, but there is a political element to this. And it is much easier for them to tighten by bringing down their balance sheet politically than it is for them to just keep raising rates. And that's a tautological truth.
Well, Power One starts at the top of the hour. I'll be there. We'll be counting down to the big release of the Fed's phase book, speaking of the Fed. Is the Fed more bullish about the economy? You got to stick around to find out. So President Trump's first 100 days almost in the book. How's he doing? We got a report card from syndicated columnist George Will. And we'll get the latest on Bill O'Reilly and his future at Fox News. Will he stay? Will he go? What impact will it have on 21st Century Fox? Meantime, halftime reports back in.
More than 24,000 companies run their business in the Oracle Cloud.
Teamwork is at the core of what the Golden State Warriors do, both on and off the court. We've added Oracle ERP Cloud to our back office to automate and streamline